Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense when the corporate world tries really hard to make things complicated. So grab your coffee because today ImmunityBio Incorporated is dropping some serious numbers on us, and let's just say their latest report has more twists than a legal drama soundtrack. We are diving deep into ImmunityBio Incorporated's latest quarterly report for the period ending the 30th of September 2025. They are a commercial stage biotechnology company, so think cutting edge science aiming to fight cancer and infectious diseases. Now, everyone knows that with innovation comes a heck of a lot of spending, and this financial report really lays that out. First up, the balance sheet as of the 30th of September 2025 shows total assets at over $518 million. Now that sounds like a lot, but when you look at liabilities, you see over $1 billion. This company is carrying some serious debt, and that is a big red flag right from the get-go. They have over $500 million in related party convertible note payable at fair value. That is basically debt owed to insiders, which can be a tricky situation. Then there is the revenue interest liability of over $316 million. This is a complex agreement where they've essentially sold a portion of their future revenues and now have to pay it back with interest depending on sales performance. On the asset side, accounts receivable jumped quite a bit to over $32 million from about $2.3 million at the end of last year, suggesting sales are picking up, but so is the money owed to them. Marketable securities also saw a huge increase, showing they've been busy investing cash. Now let's get to the heart of it, the income statement, or in their case, the loss statement. For the 3 months ending the 30th of September, they reported a net loss of over $67 million. That might seem scary, but it is actually better than the same period last year when they lost over $85 million. The 9 months ending the 30th of September show a total net loss of nearly $289.5 million for 2025, a much better picture than the $354 million loss in the same period of 2024. So while they are still losing a lot of money, the trend is moving in the right direction, which is definitely something to watch. Product revenue has soared to over $31 million for the quarter and $74 million year to date, up from just under $6 million and $6.9 million respectively last year. This is largely thanks to their approved product Ankyntiva, so sales are finally starting to roll in, which is a huge turning point for the company. But here is the catch, their operating cost expenses are still sky high at over $87 million for the quarter. They are spending a ton on research and development and selling general and administrative costs. Research and development alone is over $51 million for this quarter, largely driven by personnel and facility costs. Selling general and administrative is also substantial at over $36 million. So while revenues are up, the expenses are keeping pace, meaning those much needed profits are still a ways off. Let's look at cash flow. For the 9 months ending the 30th of September 2025, they used over $234 million in operating activities. That means their day-to-day operations are burning through cash fast. They raised a lot of money through financing activities, over $345 million this year, which is good, but it also highlights how much cash they need to keep the lights on. Now, a key financial instrument they have are warrants. They've got millions of these outstanding. These are basically options to buy stock at a certain price. The value of these warrants fluctuates a lot, and this impacts their finances. They are also dealing with significant warrant liabilities on their balance sheet, which has grown considerably. This indicates a lot of potential future dilution for existing shareholders if these warrants are exercised and could put downward pressure on the stock price. One of the biggest risk factors they highlight is their payment obligations under the Revenue Interest Purchase Agreement, or RIPA. This agreement means a chunk of their future sales revenue goes to Oberland, and it can really affect their financial flexibility and ability to raise more capital. It is like having a very demanding loan that is tied directly to your sales performance. They also have contingent value rights, or CVRS, to former Alta stockholders. That could amount to hundreds of millions of dollars if certain sales milestones are met. This is a massive potential financial obligation hanging over their heads. And then there is the leadership. Dr. Soon Shiong, our founder, executive chairman, and chief scientific officer, holds a majority stake and significant influence through his control of these related party transactions. While his involvement is a driving force, there is a clear risk here that his interests in other companies could sometimes conflict with those of the company and its other stockholders. It is a classic case of concentrated power that can be both a strength and a weakness. Intellectual property is the lifeblood of any biotech company. ImmunityBio is heavily reliant on patents and proprietary rights. The risk factor section points out the constant battle to protect these rights against competitors and the uncertainty around patent validity and enforceability. They face the daunting task of navigating a complex global patent landscape, and any setbacks here could be devastating. So what is the verdict on ImmunityBio Incorporated? They are making strides with Ankyntiva sales showing genuine growth, which is fantastic. However, the company is still burning through a massive amount of cash operating at a significant loss and carrying substantial debt and revenue interest liabilities. The reliance on Dr. Sun Xiong's related entities adds another layer of complexity and potential risk. While they're innovating with new therapies, the path to profitability is still long and fraught with financial and regulatory hurdles. The future hinges on successfully scaling Anktiva sales, managing their significant debt burden, and navigating the intense risks in clinical development and intellectual property protection. It is a high-stakes game for sure. Alright, that is our breakdown of ImmunityBio Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.